folks, Dan Frio here, the Mortgage Update, and today I figured I'd post first thing in the morning just to give you an idea. I won't be in my office today, so if you need assistance, please shoot me an email at dfrio, which is F-R-I-O, at parksidelending.com. You can call in 844-775-LOAN, which is 5626. One of my assistants will take care of you until I get back. I will be back in the office on Wednesday. I'm flying back tomorrow, but I wanted to get down to the beach, enjoy my last day here. I'm fly out tomorrow. But so what's happening this week? Just want to give you a quick update on what's going on for the week. And there's a big caption that just came out on CNBC saying 9 million people could save big time on refinancing. So if you have any interest in refinancing, trying to save some money, reach out to me. I'd love to help. In most cases, we're saving people, we're dropping their rate about 1%. So that could save you a bunch of money. The goal here is to save you money in the long run. We can save you in the short run, usually about $100 a month. But what we look to do is, let's say, for example, you call in. The first question I'm going to ask you is, why are you looking to refinance? Well, Dan, I want a lower rate. Okay, cool. Why do you want a lower rate? I want a lower payment. Well, how about if we do this? And I'll always ask you this question. Are you comfortable with the payment you're paying now? 90% of the time, the answer is yes. So I'm like, why don't we do this? Why don't we refinance you at the lower rate? Keep making the same monthly payment. Let's say it's $100, $150, $200 in some cases each month. That can usually cut off about 5-8 years of your mortgage. So let's say your mortgage payment's $1,000. If you can cut off 5 years, that's 60 payments. 60 payments of $1,000, that's $60,000 you could save. So this was the big caption, look to save. Try it out. The worst thing we can come back and say, it really doesn't save you much money. Maybe I'll give you some other advice on what you might want to do. But at least you're giving it a shot. Be, financial steward of your money. And let's see if something does work for you. There are programs out there like FHA and VA that the refinance process is really simple. In most cases, we don't need an appraisal. We don't even need to verify your income. As long as you made the last 12 payments on time, in most cases, you qualify. So let's get at it. Rates have been dropping and dropping and dropping. But like I always say, pigs get fat, hogs get slaughtered. So let's just go over this week's economic calendar real quick. There's not a lot of information coming out. Construction spending, factory orders. Here's one of the factors that I always watch on a monthly basis is the payroll numbers and job cuts and things like that. But the biggest thing here is initial jobless claims. That might play a factor in the markets this week. And then over here, our average hours worked, average hours income. So what we're following here is, how are people's income getting affected by what's the weekly, monthly, and yearly trend of people's hours worked and their income? Because the more they work and the more income they get, the more discretionary income they have. Thus, it's good in the housing market, because a lot of people now want to get into buying homes. They have more discretionary income, so now they can buy homes, which would push home sales up. But if this number starts to come, if it gets too overheated, though, we might see inflation. Now, inflation is that trigger that also the Federal Reserve watches, and if inflation starts to heat up, they might start raising rates. Don't be alarmed, because I don't really see any of this taking place in the near term. At least for 2020, I don't really see any major economic events there. So let's go to the markets. What happened last week? And again, this trend should kind of continue as long as there's no big hiccups in the market. Let's get rid of the 200-day moving average. Let me explain this real quick for those new out there. What we follow on this channel, again, my name is Dan Frio, the Mortgage Update. I do this every day. And if you're in Chicago, you can hear me on the radio. I'm on 2 different radio stations, WYLL Radio. It's a Christian radio station that I've been on for 13 years. And my show is every evening on the weekdays from 7:30 to 8 p.m. Then you can also hear me on WIND Radio, Saturday mornings from 7 to 8. And I usually have, it might be congressmen on there, attorneys, financial planners, economists, all kind of people to make it interesting to you, so you can get a trend on, what's going on. The channel is highly sought after by realtors and mortgage advisors. is also financial planners, but I get a ton of people reaching out to me saying, Dan, I need help buying a house. Dan, I need help. Do these numbers make sense? Can you beat this quote that I have? What would my payment be if I were looking to buy a house? I answer all those questions for you. So I deal with about 2/3 of the country right now. We're expanding and expanding and expanding that. We got some huge changes coming this week in regards to our technology and different programs that we have. So I'll be out in the next couple weeks explaining all of that to you. But let's see what we follow here is what we call the mortgage-backed securities market, the MBSs. This is a bond. I'll bear down it. I'll strip away all the technicals behind it, especially those who watch every day. This is a bond that trades. This is the determinant of what mortgage rates are doing. That's it. Mortgage-backed securities. That's all you got to remember. Not any of this other stuff. Not treasuries. Not 10-year treasury, 2-year treasury, 30-year treasury. Nothing. Mortgage-backed securities. So what we follow here is this is the price. What happened to the price of this bond offering? Okay, if you pay more for a bond, that means you're paying more. You're getting a less return or a less yield or a less rate. So that means the interest rate's coming down. If this number is going down, that means you're paying less. Thus, you're getting a higher yield or a higher interest rate on that bond. So we love when this is going up because it's bringing down mortgage prices. So we go down here, look at this trend that we're seeing. But again, I'll reiterate this, and you're going to get sick and tired of me saying this. Pigs get fat, hogs get slaughtered. This is the trend line right now, okay? Let me regress for a second. These are what we call the Fibonacci levels. These are levels that we follow also. They're technical levels when you're trading. Things trade in ranges. Usually, look at this past history. It traded in ranges. Went from here to here. It traded in this range. Then all of a sudden we had this huge run up. There's the China tariffs, the Mexican-Canadian agreement. Now you have, then we had Brexit. Now we have the coronavirus. All these are playing havoc in the market, good or bad, and so it's basically pushing people out of the mortgage or stock market and into bonds. And again, we saw a correction last week in the stock market one day of 600 points. That was right in here, and that pushed up the prices of this bond, thus bringing the mortgage rates or the yields down. So I don't see this trend really faltering, but I don't see it continuing at this range. Here's the bad news is we have a lot of, let's look at some moving averages. Look at these moving averages that we have. So there's a 100-day moving average. Let's get rid of 200 days. I don't really follow that too much. We got a 25-day moving average, DMA, 50-day, 100-day. So look at these moving averages. They're all down here. We're way above that line. It's scary because we could drop all the way back down into this range. Let's extrapolate this out a little bit to there. Extrapolate this out a little bit to there. So we have this range here that if things turn around or we get spooked in the market, this is how bad we can get affected. So even though I'm off today, I'll be alerted all day long on what's going on with this. So my clients don't feel any pain. If I start seeing retraction down, which in this case would mean mortgage rates going up, I'm going to start locking people in. I've been holding off. Rates are getting better and better and better and better. But again, pigs get fat, hogs get slaughtered. I don't want my clients to get slaughtered. So if I see a reversal in these mortgage rates, I'm going to start locking everybody. You can see we basically peaked out there. We almost peaked out here. There's a great trend going on, but it's kind of scary because nothing goes straight up. So that's what's going on with the technicals. I don't see any news coming out today again that should really spook the market in any way. And then you have CNBC basically saying rates are probably going to get in the threes. Sometimes, in some cases, they are in the threes right now. So look into that. And if you're looking to refinance, it's probably a perfect time to do that. And we're also getting into the spring buying season for homes. If you need pre-qualified, just click down below. I got all kind of links down there below. You can apply online. I'll get back with you within probably hours. I like talking to everybody. So sorry I'm old school, but I like to talk to you. You don't have to talk to me if you don't want. You can do everything online, but I'd love to talk to you because I want to make sure we get the facts and put you in the best program possible. So that being said, if you like what you see, please don't forget to give me a thumbs up. Subscribe down below. And I have all kind of links down there below. You can copy and paste those into your URL. If you're looking to get your free credit scores, you want to get your true credit scores that people use, like us, in regards to your mortgage applications. And then I have one of the best credit advisory systems in the whole country. I'm actually an approved agent of that. I walk you through. As in most cases, when I can't help somebody, it's either their income or their credit. And I can't really do anything about your income, but if we can help advise you on your credit to get you into a better credit score for better rates, better programs, or even just getting you qualified, I'd love to help you there. So I'll post again tonight to let you know how the market ended, but I don't really see any major changes today. There shouldn't be unless there's some big hiccup in the market. So hope you like the view. I love the view today. I'm going to head down to the beach, get a fishing pole, and do some fishing for the day. So God bless. Take care. I'll be posting tonight. See you then.